The Financial Massacre Orchestrated by Soros, 2025. You may have mocked Warren Buffett for exiting U.S. equities too early, missing the dot-com boom of the early 2000s, or the explosive rally of AI stocks last year. But there is one man you cannot afford to underestimate. For 28 years, since 1997, he has been waiting. While the world seemed to have long forgotten him, he never put down his rifle. He remained in the shadows, waiting patiently for the perfect moment to strike. Because in financial warfare, timing is everything. Fire too soon, and the prey escapes. Years of preparation wasted, but now, after nearly 3 decades, the shot has finally been fired. What does this mean? This isn't just a trade. It's a calculated death sentence, precise, deliberate, and devastating. If you're still blindly buying into U.S. assets, whether stocks, bonds, or even just holding U.S. dollars, then you're not only ignoring the signs of an impending financial crisis, you're placing yourself squarely against the very force that manipulates markets. And that force, this time, is George Soros. And he has a target: Elon Musk. In recent weeks, Tesla stock, Musk's flagship, has been aggressively shorted, plunging over 55%. Welcome to the brutal art of short selling. So, what is short selling? Think of it as profit in reverse. Most investors buy low and sell high. Short sellers do the opposite. For example, say you own Tesla shares worth $100. I borrow them from you and immediately sell them on the market for $100 in cash. When the stock drops to $50, I buy the same shares back, pocketing the $50 difference. I return your shares, add $5 in interest, and walk away with a clean $45 profit. But there's a catch. If the stock rises instead of falling, or even if it stays flat, I lose. The interest keeps ticking, and losses can be unlimited. That's why short selling is not for the faint of heart. And if Soros is making this move now, after decades of silence, it's not a gamble. It's a statement, a signal that the storm is no longer coming. It's already here. That's how retail investors like us short stocks. But here's the question. Why did Elon Musk himself recently speak out, claiming that the reason Tesla's stock has collapsed so dramatically is because of a deliberate short-selling campaign led by Soros's manipulation network? What does that even mean? Step 1. Soros manipulates public sentiment. He holds significant influence over major media outlets. Within just a few days, 47 respected media organizations released over 3,000 negative headlines about Tesla across the globe. Take this example. Tesla's sales in Germany dropped by 70%. Sales in China and across Europe were cut in half. If you so much as glanced at your phone that week, even casually checking financial news, you would have seen a flood of bad news about Tesla. In just 1 week, panic selling of Tesla shares surged by 178%. So how does one manipulate public sentiment? It's simple. Through the media, through headlines, through carefully seeded stories that infiltrate the public mind and erode trust in Tesla. But that alone isn't enough. People still need to see something tangible before they fully believe. So comes step 2, and this is where the real game begins. When Tesla's stock price was near its peak, Soros made his move. He quietly accumulated a massive amount of shares and then began to offload them in waves. This selling pressure accounted for 18% of Tesla's total market float. In other words, it's as if he bought the shares from 18% of Tesla holders, then dumped them onto the market to crush the price. Didn't buy enough shares yourself to move the price? No problem, just borrow them. Push the price down, then buy back cheap and return the shares. What if you don't want to lend your shares? That's fine, because here's the twist. You don't actually hold the shares directly. Your broker or your bank does. So I don't need your permission. I just borrow your shares from them. And when you finally look at your portfolio and see your Tesla position plummeting day after day, you'll be forced to ask yourself, should I sell now and cut my losses? Even if you don't sell, it doesn't matter, because others will. And the more people sell, the lower the price goes. Soros keeps selling. You hold your position, but the stock keeps plummeting until you're finally forced to sell. Still holding? Okay then, step 3, physical sabotage. Dozens of Tesla stores suddenly have their windows smashed for no apparent reason. Tesla charging stations vandalized systematically. How is Tesla supposed to keep doing business in that environment? If a company can no longer operate, would you still want to hold its stock? But we're not done. Step 4, checkmate. When Elon Musk acquired Twitter, he used 63% of his Tesla shares as collateral to finance the deal. If he had sold those shares outright, Tesla's price would have crashed instantly, and he'd lose control of the company. So he had no choice but to pledge them as collateral. But now that Tesla's stock is collapsing, so is the collateral value of those pledged shares. For example, if you pledged shares originally worth $1.1 trillion, the bank might loan you $800 billion. Now, with the stock price down, the same shares are worth just $800 billion, equal to the loan value. If the stock falls further to $700 billion, the bank takes a hit. So what do? They call in the loan. They demand that Musk repay the full $800 billion immediately. If he can't, the bank sells the collateralized shares on the open market to recover the funds. And once that happens, once those pledged shares hit the market, Soros and his network swoop in. They buy back the same shares at the lowest possible price, then return them to the original lenders they borrowed from. Game over. If you think this is just a personal feud between Musk and Soros, think again, because the entire U.S. stock market has started to fall. If someone as powerful as Musk can't protect his stock, what chance do other companies have? This isn't about Tesla. This is just the opening shot, a carefully planned financial massacre in motion. And the way Soros has executed this operation bears a striking resemblance to 1992, when he broke the Bank of England, and 1997, when he rattled the currencies of Southeast Asia. But this time, the target isn't another country, it's America itself. You may laugh. Who in their right mind would short the United States? Well, I'll laugh back at you. Remember the 2008 financial crisis? It started in the U.S. America was functionally bankrupt. Banks collapsed. And yet today, America is still standing. Why? Because while the explosion happened in the U.S., the casualties were global. It wasn't Americans who paid the price. It was the rest of the world. So if you don't want to be one of the victims in this new crisis, if you want a chance to rise above it, even elevate your social status, then subscribe to this channel. I'll keep giving you the insight others are too afraid to say out loud. Worried you'll forget this video? Like it so it gets saved in your playlist and you can come back to it anytime, to analyze, to act. Let me be clear. Even the U.S. Federal Reserve has been posting losses for years. The government is out of budget. They don't have money to spend. Nobody wants U.S. government bonds. No one wants to lend money to America anymore. The bubble inflated by AI hype, that's bursting. Inflation is spiraling out of control. And despite this, the Fed still refuses to cut rates. And after the pandemic, America feels empty. Offices are vacant. Commercial real estate is collapsing under sky-high interest rates. Landlords can't pay. Now banks are sitting on a pile of toxic debt. So what does this all mean? It means the perfect conditions for a malicious short-selling assault have almost fully ripened. You'll soon realize that Soros' current plundering scheme bears an uncanny resemblance to the financial attacks of 1992, when he broke the Bank of England, and of 1997, when he shook the currencies of Asia to their core. But this time, the target isn't some foreign country. It's the United States itself. You might laugh. Who would dare short sell the US? And I'd laugh back because remember, the 2008 financial crisis also started in America. Back then, the US was essentially bankrupt. Banks collapsed. So why is America still standing today like nothing happened? Because the explosion may have started in the US, but the casualties, the entire world. The ones who paid the price weren't Americans. It was everyone else. And if you don't want to be a victim this time, if you actually want to climb the social ladder when others fall, then hit that subscribe button. I'll keep giving you the critical information that others won't. Worried you'll forget everything after watching? Then like this video. It'll automatically save to your playlist. You can revisit it anytime, take action, and stay ahead. Now here's the reality check. Even the Federal Reserve, the very institution that controls U.S. monetary policy, has been reporting losses for years. The U.S. government is running out of budget. No one wants to buy U.S. bonds anymore. No one wants to lend money to America. And remember that AI-fueled stock market bubble? It's bursting. Inflation? Out of control. Every key economic indicator screams recession. And still, the Fed refuses to cut interest rates. Post-pandemic, the U.S. feels hollow. Office buildings and commercial spaces sit empty. Borrowing costs are sky high, and real estate owners are defaulting en masse, which means, surprise, the banks are once again holding mountains of bad debt. Do you see what this all adds up to? Every condition for a ruthless short sell operation is now in place. If you still don't get the full picture, then by the time the markets truly collapse, you'll be too late. Because this playbook, it's the same as before, just a new bottle, same poison. Let me explain. When God wants to destroy someone, he first makes them go mad. Back then, Southeast Asia was booming, China was cashing in, and asset prices were soaring. Everyone dove headfirst into speculation. And that's when prey is most vulnerable. That's when Soros picked up a sniper rifle and fired the first shot of a financial war across Asia. Shot 1, short the Thai stock market. Target, Thailand's biggest banks and financial institutions. He dumped their stocks hard. At the same time, trusted global media outlets, even Thailand's own central bank, spread rumors. These financial companies are in serious trouble. What happened next? Panic. The public rushed to withdraw their money. Defaults surged. The Thai stock market collapsed. Shot 2. Wait. Will the government intervene? If not, the entire economy crashes and Soros swoops in to buy up assets dirt cheap. But if the government does intervene, they'll need to drain their national treasury to save the system. And that is when the third shot is fired. The Thai government poured hundreds of billions of US dollars into saving its economy, trying to stop Soros. But what they didn't realize was just how devastating the consequences would be. Soros launched his next move, an aggressive short-selling attack on the Thai baht, Thailand's national currency. Not only that, he split his forces and launched simultaneous short-selling campaigns across Southeast Asia. Currencies were dumped en masse, and he swiftly converted everything into US dollars. Why? Because he knew once the Thai baht collapsed, every other currency in the region would fall like dominoes. So he expanded the battlefield and went all in. Southeast Asia was dragged into the storm. Indonesia, the Philippines, Myanmar, Malaysia, none escaped the impact. And we all remember how that ended. Soros walked away with enormous profit, calm, collected, victorious. Meanwhile, Southeast Asia lost everything: prosperity, wealth, decades of growth, wiped out. Even the fixed exchange rate system had to be abandoned. Soros's short-selling strategy was no random gamble. It was a calculated three-shot assassination, each step setting up the next. The first shot simply cleared the path for the final blow. And now ask yourself, is the same script being played out again? In earlier videos, I told you Warren Buffett and other top U.S. capitalists have quietly exited the American market, leaving behind only piles of cash. So now, who actually holds U.S. stocks? Individual investors currently hold 30% of the U.S. stock market. Mutual funds own about 50%. So you might assume these institutional investors still control most of the market. But here's the twist. 90 to 95% of those mutual fund shares are actually owned by individuals. In other words, the U.S. stock market is dominated by retail investors. Roughly 30% of them invest directly, while another 40 to 50% invest through funds. On top of that, foreign investors own about 10% of the U.S. market. So even conservatively, 70 to 80% of the U.S. stock market is in the hands of individuals and foreign money. So if the stock market crashes, who's going to suffer? Will it be the tycoons like Buffett, Gates, or Zuckerberg, who sold off long ago and exited quietly? It'll be the average investors. And the money? It'll vanish from around the globe. That's why, even if this disaster erupts right in America, it'll mirror the 2008 financial crisis. Back then, billionaires used government bailout money and zero-interest Fed loans to buy America's stocks at fire sale prices. And the ones who got burned? Everyday investors and the rest of the world. So why is Soros targeting Tesla for short selling? Many say it's personal. Soros represents the EU, while Elon Musk represents America. That might be true, but that's just the surface. The deeper truth is this. Tesla isn't just a hot stock from Trump's era. Even as of last week, Tesla accounted for nearly 5% of the NASDAQ index. It's one of the few AI-related stocks actually delivering real-world tech. Autopilot, smart parking, you name it. That's why it has attracted massive amounts of retail investor money. And in terms of short-selling potential, if Tesla collapses, it won't just spark panic selling. It could crash the entire U.S. stock market. It could burst the AI bubble altogether. Even more alarming, Elon Musk himself has been selling off his Tesla shares recently. Combine that with everything I've mentioned. The setup is perfect. Timing, conditions, and sentiment all align for a massive short sell operation. And the scariest part? Tesla might just be the beginning. Those still dreaming that holding long-term guarantees profits might not realize their account balances are being cut open without a single scalpel in sight. This world is always making mistakes. Yet from the moment we enter school, we're taught never to make any. People put their money in pensions, in banks, and stocks. And when the market crashes, when banks go bankrupt, when stocks bleed, they still teach their children, don't make mistakes. But if they're not the ones ending up poor, then who will be? A child only learns to walk after falling down. To become a pilot, what matters isn't just knowing how to fly, it's knowing how to handle emergencies. Investing is the same. In a bull market, even blindfolded, anyone holding stocks might make money. But in a bear market, what matters most is whether you can tell the difference between a bull and a bear. Are you going to listen to a lady selling knives at the market? Let me tell you this. In the stock market, your profits don't depend on how promising a company seems. They depend on this. Is more money flowing in or flowing out? If the sellers have stronger capital than the buyers, the stock will drop, no matter how good it looks. In other words, market movements are dictated by the big players. So honestly, we don't even need to read financial reports or analyze the economy. We just need to follow the money. And here's what's truly terrifying. It's not that Soros wants to short U.S. stocks. It's that he's holding a final card that could be 100 times more devastating. That's the final blow. If he follows his past playbook, his second shot will be triggering a U.S. liquidity crisis, forcing the Federal Reserve to slash interest rates. Soros's real skill lies in cornering central banks into unlocking asset transfers themselves. What does that mean? When the U.S. hits another crisis, retail investors will start hitting stop-loss levels in their investment funds, triggering automatic sell-offs. Back in 2020, U.S. markets crashed so hard they had to activate circuit breakers. It was the same reason. When that moment comes, ETFs and mutual funds, loaded by average investors, will experience massive redemptions. Even those who rarely trade will panic and run. The result? A full-blown market collapse. And the Fed will be left with two choices. One, sit back, watch America crumble, and see global capital flee the U.S., crashing the dollar. Two, take action, either by cutting interest rates or printing money to inject liquidity. Historically, the Fed always ends up doing both. So look around. U.S. stocks have already dropped significantly. Even the Fed has forecast a recession. Yet they stubbornly say they won't cut rates. Why? It's simple. Cutting rates now won't help anymore. Over the past few years, the Fed has repeatedly posted losses. Why? Because they bought U.S. Treasury bonds years ago with average yields around 2.6%. But now they're paying out 4.4% interest to commercial banks. They're bleeding money. So will cutting rates magically reduce their interest expenses and stop the losses? Not quite. Still, they refuse to cut. Why? Is inflation really the reason? Here's the uncomfortable truth. The U.S. Federal Reserve is losing control of the dollar. In fact, just last year, the Fed already cut rates 3 times. Theoretically, if bond yields are at 5% and the Fed cuts rates, people should rush to buy government bonds to lock in that high return, which would push bond prices up. But in reality, after the Fed cut interest rates in September, bond prices fell. That means fewer people were buying U.S. bonds. In other words, when the market stops obeying the Fed, the old trick of slashing interest rates becomes useless. Even now, with such high yields, U.S. bonds are still not selling. You can see it clearly. Government bond values have dropped by nearly half in just a few years. The U.S. government treasury is also running low on cash. If the Fed insists on cutting rates now, bond values will drop even more. And that could bankrupt a wave of U.S. banks currently holding those bonds. So at this point, cutting rates might actually become the trigger for a new financial crisis. That's why if the Fed wants to cut rates, it may be forced to buy up the bonds itself. That means expanding the balance sheet, printing money, and purchasing bonds directly. In simple terms, if the Fed goes this route, it's essentially just printing more dollars. And once they start printing, the dollar will rapidly lose value. Do you see it now? Whether the Fed acts or not, the end result is the same. The U.S. dollar will devalue. And Soros, he's already laid out the minefield. His third shot could be profiting from that very collapse. He might short the dollar. But will he really do it? I'm not sure, because capitalists like him still rely on America. Letting the dollar collapse might not actually benefit them. But here's the thing. You don't have to short the dollar to profit. Because when capital flows flee the U.S., they'll likely rush into safe haven assets like gold. And guess what? Soros has been buying gold in massive amounts over the past few years. When that moment arrives, the gold he's been hoarding could skyrocket in value. And you'll realize it's no coincidence that Buffett invested in the Japanese yen earlier. Because if U.S. stocks crash, global capital might flow back to Japan, boosting the yen's value. Look at what happened after the 2008 financial crisis. Gold prices surged 180%, and the yen strengthened nearly 50% against the dollar. That's why I personally started buying gold last year. and began shifting into yen at the end of the year. Compared to most people, I've already sold off some US stocks, not because they weren't profitable, but because I saw a real risk of dollar devaluation. So I moved my dollars into gold and yen to hedge. Whether you're an investor or a business owner, you don't need to predict the exact moment the US market crashes. What you do need is to prepare for the most likely scenario. If that scenario happens and your name is on the winners list, you're good. If it doesn't, the worst case is you missed out on some profit. That's all. By principle, Buffett is a major investor. We are small ones. Our strategies and plays aren't the same. But in reality, the core logic is quite similar. When that third shot is fired, it will signal the beginning of a massive asset transfer. Now think, who will end up as the final victim? You might feel like this has nothing to do with you, but the truth is simple. Taiwan's labor insurance fund, Vietnam's national wealth fund, Japan's pension fund, and Europe's major insurance funds all have significant exposure to U.S. stocks. When the crisis hits, these funds will be forced to take losses and exit the market. After the 2008 crisis, global money was funneled into U.S. treasuries as the safe haven. But this time, even now, U.S. bonds are not exactly selling well. So when the next crisis hits, who's going to buy them? And on top of that, the U.S. still needs to pay back its debt to the world. But once the dollar loses value, that debt gets quietly eroded too. Around 2008, the U.S. collapsed. But other countries collapsed even harder. So who were the winners back then? It was the capitalists who had already placed their bets on gold and the Japanese yen. They cashed out at the peak and then swept in to buy up global assets for pennies on the dollar. Even domestic U.S. assets were dumped at fire sale prices. When the crisis hit, U.S. banks were the first to get bailed out. Not right at the start, but after the collapse. And once they got that bailout money, they went around buying up everything. From ports in Greece to banks in South Korea, all dirt cheap. Meanwhile, financial giants like Goldman Sachs and Morgan Stanley didn't just survive the crisis, they came out stronger than ever, with even deeper monopolies. As for Buffett, the period when his wealth grew the fastest was right when he started bottom fishing in the 2008 crash. The key takeaway from this video is this. From now on, it's no longer about which asset class will rise. What matters most is whether you're holding must-have assets like gold. Because what we really want is cash on hand, ready to strike when the third shot rings out and global assets are dumped at bargain prices. In the end, here's what I believe. Every time George Soros shorted a market, he was vilified by the world. But the truth is, regardless of whether Soros acts or not, the U.S. stock and bond markets are already facing serious risk, and a financial crisis in America is now almost inevitable. This issue has existed for a long time. Soros is just the guy who pulls the trigger. He's also the guy who ends up taking the blame. When the market crashes, Wall Street media will start blaming Trump, Elon Musk will make headlines for massive layoffs, and unemployment will spike. Some will point fingers at the Federal Reserve, saying they failed to cut interest rates in time and caused the market collapse. But like I said in the earlier videos, a stock market crash might actually benefit the financial elites behind the Fed, even the U.S. government itself. In the end, they'll just find a scapegoat to pin the blame on. Soros has never cared about his reputation. He just wants to make his money and get out. And when a big player like him shorts first, he triggers a domino effect. Others follow, accelerating the crash. So if a collapse is inevitable and everyone is trying to avoid blame, then even if Soros really is the spark that lights the fuse, he's still just another scapegoat. I debated whether or not I should say all this, but in the end, I chose to speak out. Because I want you to understand one thing. In the world of capital, there's no good or bad. There are only people who get richer and people who get left behind. So ask yourself, which side do you want to be on? The wealthy or the struggling? Will things unfold the way we've predicted? How will we adjust our strategy when the time comes? Because time is limited, I'll end the video here. I share free insights on how to become wealthy, build a business, invest, and achieve financial freedom. If you don't want to miss the next update, follow my channel, hit the notification bell, and feel free to share this video with others. I sincerely wish that everyone who liked this video will one day achieve financial freedom. And if even just one or two things I said today help you live better, then I'm already fulfilled.